Dale Pinkert. Welcome to FACE. Also want to welcome our viewers from investing.com. Let's have a great day. Have a very good interview set up today for those of you interested in agricultural commodities. I think they're excellent technical markets. So Angie Setzer is going to be with us. Twitter handle @GoddessOfGrain. Hello, Midris. Everyone doing okay? I want to start off by congratulating Nicola Duke on her euro pound call, up well over 2% now. Blake got on it Tuesday when we had that big reversal in the pound. It turned out to be a great trade. These are pattern and plays. These are high conviction trades that we believe are good risk rewards for people. Have about a 60% hit rate. Most of the risk rewards are 3 to 1 on these trades, and for people that are not familiar with it, you can test drive our traffic light page, the whole website, for $1 for 10 days. And that way you won't be running red lights, you'll be looking for green lights. You're going to have all the technical areas, you're going to have all the charts, you're going to have different methodologies. So let's just take a look. Here's a Treasury by Nick, just to give you a live example. Treasury under pressure. In fact, Ash from our community is talking about Martin Armstrong, who I respect highly, who's looking for a sovereign debt crisis in 2018. I've interviewed Martin a couple of times. He believed it would start in Europe first, spread to Asia, and then the US. So he's expecting a dramatic rise in sovereign debt. Maybe this tax package has something to do with it. Interviewed Luke Groman yesterday, talked about total FX reserves beginning to shrink, and that's because people are, and countries and nations are attempting to de-dollarize payment of oil and other commodities, trying to move away from the dollar, take away what has been a privilege to be a reserve currency, but with governments really not controlling debts and deficits, going to challenge King Dollar in the days ahead. So when you subscribe, you not only get harmonic work from Nick, you could go to what Greg Horvat is looking for in the same instrument, looking for one more pop and then a big break. Basic technical is covered by Blake and Steve. You get candlestick work by Steve and Blake, and you get the macro with Stelios Kontos, and Stelios is going to be next on deck. He's on deck. He's in the on deck circle, swinging the bat, getting ready to talk to us about the pound and crude, which he's been very constructive on for quite some time. I just want to give you a few looks of some of the things that I'm looking at. Start off with the euro. So the euro looks good to me. We've had one drive, we've had two. To me, this looks like we're setting up for another move. Still think that we're going to trade over the 120 handle in the days ahead. Looks to me like the dollar, which has attempted a rally the last 2-3 days, is starting to run out of juice. You have a little 1, 2, 3 here. At least a pullback to correct this bounce and possibility of new lows coming. And I started talking about this with Steve Volge yesterday. One thing I try and pay attention to is a correlation. You have Canada making a new high here, at least challenging recent highs. Went right to it, trying to reverse a little bit here. Yet Aussie, which came out of the hole last week and rallied a bit, squeezed some shorts, is not making a new low here. So if I'm right about the dollar, even the weakness, the weak sister being the Aussie, has a potential to rally back possibly to this moving average. I believe this is the 200-day on the 1 hour, up around 76, 72. Very tight risk trade. One thing I do want to mentor people on is when you're trading, say a low here, a higher low, and you want to have your risk under the previous low, do not put it 1 pip under this low, okay? Because If you know my handle, I believe in stop hunts. I believe they're a reality in the business, that they used to happen in open outcry. On the floor, I used to hear audible roars when they would elect and run through buy and sell stops. So give your stop a little tolerance. Sometimes they'll just run a stop by, at times I've seen it by as few as 1 or 2 pips, maybe 10. So give your stops some breathing room, just in case it's a stop hunt where they're looking for stops before they turn it, trying to find some liquidity. Because Mr. Market many times tries to shake out as many participants as possible. And because of that, they go for stops. And then once people are taken out of a stop, it's very hard, unless you're a professional, to recommit to the same trade after taking a loss. I know pros that could do it. I've seen Blake do it. I've seen Steve do it. So just a little tip on stop placements, because you know anyone who got long over the last several days and is holding a long position, they have their sell stop here in Aussie. Give me a while if you understand that. It's our mission every day to build up and edify traders and to learn from mistakes that we've made in the past so that you don't have to go through it. That's part of our mission here at ForexAnalytix. So there's a look. I think there's a shot here in the Aussie. Here's the Euro Pound, which Nick shorted up here. And Blake got on it this reversal day. Still see no reason to buy it, even though the pound is outperforming. I don't think, I see a comment that EU's a mess and the dollar's the only alternative. I can agree with that long term, but I think before we have a big dollar long, we're going to see the 120 plus handle in euro for possibly campaign shorts in the euro. And also, well, you know what? It's not the market. I've heard that from people before. Ash, oh, I got burned in euro. Oh, I got burned in wheat. You know what? The market didn't burn you, right? You're wrong. Okay, so markets don't burn you. It's our judgment and discretion as a trader that causes problems. The market doesn't really even know you. Okay, there you go. So you've already analyzed it. You are over leveraged. Keep an eye on this Aussie here. We could get a turn here. Not sure if there's anything else I really wanted to cover. I do get interesting looks on Twitter. I have a pretty good following on Twitter. And Rudy is excellent, Rudy Marin. And he's got a cable, it's an index. So it's normalized. So it's not just against the US dollar, it's against the peso, the euro, the Kiwi, all of these. And he's starting to say, because he knows one of my main method is looking for third drives here. So be careful if you're long pound. We could be approaching some type of resistance. Earlier in the week, we did talk about the pound having the potential to rally to 34.5, 35, and here we are. But to me, momentum's a little bit too strong. I can't buy it up here. I can't short it. Sometimes the right trade is no trade. So the suggestions that I made, I stand by them. And I believe that we're going to have Stelios come in here. I just want to invite everyone for $1 to test drive ForexAnalytix for 10 days so that you really can get an understanding, not just in our free webinars, of all the hard work and the talent of the team. I've been around for a while. I won't tell you how many years, but this is the strongest team of analysts and traders I've ever been a part of, and I've been a part of many things in my 30-year plus career. Grega, I'm a fan of all of these people I interviewed on FX Street when I was running the live analysis room there, and respected all of their work. And it's really an edge for me at any time, if I wake up in the middle of the night, for me to have sounding boards. You know, I'm a big believer in intelligence gathering, And there's a lot of intelligence and great analysis right here on ForexAnalytix, everything right at your fingertips. Many different instruments as well. You'll see how many different instruments that we cover. And, you know, I'll wrap up this commercial here, but I'm not saying it because I host a free room here. I'm saying it because I believe it. I cannot push anything that I don't have conviction about, and I have a lot of conviction about this team. In fact, I put out a tweet and said, if you could find a more powerful FX combination team, please send me the link. I'll join for intelligence gathering there as well. I had no responses. So in my extremely accurate and humble opinion, this is the best team that you're going to see. Yeah, Rob, it's all setting up. The COT, you have a lot of spec longs. I agree with you. But, you know, price is king. And you know what? Take a look at Bitcoin. The public could be right for a long time, longer than our accounts can last. So we still have to pay attention to price action. And I still have conviction that the euro has not topped yet. So that's something to keep in the back of your mind. But when you till you start getting price action that says that it's over, this rally from 103 in the euro to wherever it peaks, or at least we're going to enter a larger corrective stage, the COT could make you go broke. So commercials have bigger and deeper pockets than everyone here combined in the room. So keep that in mind. So with that being said, Stelios, I'd like to hear what you have to say with what's happening in the pound. I know you've been constructive on the pound since I've known you. And also oil, you know, about $10, $12 ago. So would love to get an update from you on what you're seeing in here. Yep. And if you need me to, I could pass the screen to you, or you could take it over yourself.
Hi, good morning, Dale. Good morning, everybody.
Good morning, partner. How are you?
I'm very well, thank you. I'm very well. Let me just take the screen. Show my screen. So hopefully you can see my screen now.
Got it, buddy. We have the Dixie here.
Yes.
All right, so you're kind of in agreement. You think this is just a little temporary bounce in the dollar?
Yes, I agree with you 100%. I've said this for a few months. This is a monthly chart, so these are monthly candles. Okay. I still think there is going to be probably a little bit of a pop higher to the dollar. We've got Yellen, who was a little bit hawkish yesterday. She's outgoing, and that's actually quite funny because usually the outgoing central bankers usually turn a bit hawkish as they're going. We remember that with Trichet and you know, some other examples. But I think that we may get a little bit of a bounce in the dollar. Remember, the market is pricing, Fed fund futures are pricing right now pretty much 100% chance of a December hike, or close to 90%, something like that, and also nearly 2 more hikes in 2018. So, you know, there's a chance we might get a little bit more priced in, and then I think that will be it for the dollar, because we have to remember that they have been hiking into an economy which has inflation below target, and they think it's going to go to 2%. It doesn't look like it's at the moment. So, you know, it's a tough thing hiking into an economy which is really not meeting your inflation mandate. Anyway, that's my view on the dollar. So I agree with you that there might be a little bit of a pop in the euro dollar, and then we see how it goes. But anyway, I always start with this chart, so I start with that now. I want to move on to oil because we have the OPEC meeting going on right now. And we have the usual tape bombs where people are saying things, delegates are saying one thing, then denying it, and then it's getting a bit silly. But the main point to remember is what I've been saying for a while, what I was saying from when oil was at 40. OPEC and the rest of the oil-producing countries, this is their main product. They want to protect it. They have done this many times. They let here, if you can see here, they let the price drop from $105 to now 30 within under 2 years. They do that, and then shale oil gets obviously a big problem because it's more costly to produce. so rig counts drop. Obviously, technology is advancing, so we're not getting what we used to get, which is after every big drop, you get a straight away a bounce. We're not getting this yet. It's a bit more prolonged, and this is because technology is getting better and better. But still, oil producers want to keep their product at a price where they can make money. It's a finite product, and let's not. I think it's commonly understood that oil in a few decades from now is not going to play such a big role as it is now, in cars, in every application.
There is an expression, Stel, even though it's taking a lot of time, there's an old expression that the longer the base, the bigger the launch into space. And we're talking about a 3-year formation. And if you want to be a classic technician, you could almost make a case that we have a Head and Shoulders that's going to break out, and that's how people are coming up with $90 oil again, based upon the price structure and the width of this formation.
Yes, I mean that will make sense. And the other thing we have to remember is that the original output cut agreed was 6 months, and now we're 2 years into it, and they're or under 2 years, but whatever it is, and now they're agreeing to extend through 2018. This is not going away, so they know that they have to keep price supported. And we can see from this chart, and in general, any foray into the low 50s or mid 40s, if it gets back there, that will be for me one of the biggest buy levels that that I would see in the next few years in any instrument. So I think there's a chance, there's this resistance zone here, that there's a chance we might react from that. But I think the long-term price move for oil is still higher, and is going to continue to go higher until we start getting real change in terms of the oil use. We're already seeing this in cars. We're going to start seeing it everywhere. Then there's going to be a problem with oil, and I think the oil-producing countries know that, and that's why they're trying to get as much bang for their buck as they can with their product now. I mean, I'm not an oil expert, but this is my view, and
I like it. Stel, that's all economic, and we know all the pots that are bubbling on the stove in the Middle East, and there is no risk premium in the price of oil here. Decertifying the nuclear deal by Trump, and what's happening with Saudi Arabia and Yemen and Iran. If anything does trigger in the Straits of Hormuz, you could see $20 in oil in a heartbeat. So I do know some analysts that say that's the game plan for 2018, that there could be some type of conflict in the Middle East, and that is not in the price at all.
Yes, I agree with you 100% on that. And it's interesting because in the past there was always a big reaction from oil on any kind of geopolitical crisis, and you're right that we haven't seen that much or any really. So with having that view on oil, you can turn to an oil currency like the CAD, and our friend Luca was talking about this in the chat room today, and I think he's right that we're getting to a really big confluence level of resistances, and you got the zone here. There's some other stuff which I don't have on this chart, but there are, I think dollar CAD, which will probably coincide with the peak in the dollar. I think dollar CAD is going to be a really great short, and if it gets anywhere near 130, I'm getting on board that.
I know that you guys, I'm like the good cop, bad cop. I'm the salesman, but you bring up a point that there's great idea flow in our chat room, which is for subscribers only that are 6-month subscribers, or at least you could be an observer, even being a 1-month subscriber for intelligence gathering. And I've watched Luca's calls and trades for years, having him, he followed me around, and you don't fade that guy. He has great ideas, and he's just one of the many excellent traders that do not do this as an avocation, but feed their families and provide shelter this is the way they make their living. So something else to consider, this webinar, you get about an hour of analysis when I'm not talking, and you get, almost 24/6 in the other chat room.
Yeah, I agree. I mean, I myself learn a lot from the chat room. It's a great place. It really is. So that's enough of the oil and the CAD. Now turning to the pound, I've said for a while now that, and I've seen a lot of people just looking to sell sterling rallies ever since the referendum. And there was some logic in that, but I always said that, look, if you're short sterling, you're always one headline away from a huge squeeze. So you can, you keep shorting sterling as much as you like, and there was success in that strategy. But
Hugh.
I have been, yes.
Hugh, and good morning. I'm here. I'm listening in. I just want to let you know I'm here.
Yeah. Okay. So yeah, there's been a huge success in that, but things are slowly changing. We had this Telegraph, the Daily Telegraph article saying that there's been agreement in the amount. Okay, it's something like 100 billion, which if you take out some credits and stuff, it's probably a little bit less than half of that. And although that's a big number, if you break it down, and it's a number that, if it turns out to be correct, it's going to be paid over a period of time, it actually is very close to what the UK is paying annually to the EU at the moment. So financially speaking, okay, it's a big number, but it's not going to be a huge difference to what is happening right now. Don't get me wrong. I think, personally think that being a part of a big union like the European Union and all that is a good thing. It has good things associated with it. I understand what the British are trying to do, and they want to become more independent and all that. But there's pros and cons on both sides. But I'm just saying that in terms of financial standing, it's not a huge thing, this settlement, if it turns out to be true. So you're starting to get now a few headlines here and there that things are progressing, and if this continues,
preferred way to play it still by shorting euro pound or net long pound?
Sorry, can you say that again?
Is your preferred way of playing a constructive view in cable being short euro pound or being net long pound dollar?
I prefer being short euro pound and being long sterling versus the Kiwi, which I have only a small position now. I used to have a bigger position. I got out at a nice level, unfortunately a bit too early, but still. But yeah, I am looking, if there is any kind of bounce towards the 90 here in euro sterling, I think it's again going to be a very good short. So as things progress and you get more headlines and more things that show that we're getting to an agreement, the pound will keep rising. That's my view. There's no way around it. So on a risk-reward basis, having a trade, if there's any kind of pop with a stop near 90 or something like that, I think it's a great short, and I'm personally going to do that because I believe that at the end of the day, the European Union and the UK, they want to find some kind of solution. They don't want to have a hard Brexit. Of course, the European Union, I've said this many times, they want to give an example to other countries, because if the UK, they leave and they have a great package and everything is great, other countries might be tempted. So they don't want to do that. But on the other hand, the UK was the second or third biggest economy in the EU. They can't just let that chunk go without some kind of good compromise between the two sides. That's my humble opinion. So,
thank you, buddy. You want to show your pound dollar chart though, and or pound Kiwi?
I was just saying that the pound is it's showing a lot of signs of life, Stelios, and you've been warning people about being on the short side of the cable, and we're really getting to that point, and you're looking at the pound New Zealand right now, but if you look at all these cable pairs and you just add the euro pound up, which I'm short some, I mean, it's starting to firm up. It's scary if you're short.
Absolutely. I wouldn't want to be short sterling against anything really. The cable in particular, because I think that the dollar might see a bounce into year end. I'm not sure if it's going to be the one that outperforms, the sterling pair that outperforms. I still think sterling Kiwi is going to keep going until it reaches some like 2. But in the long run, I want to be long sterling against pretty much everything.
Okay,
So
so don't be penny wise and pound foolish, and be short the pound.
Well, that's my opinion. I've said this for the last few months as the pound has been strengthening. So I stand by it.
Okay.
Hey,
so
yep. Stelios, real quick, have you talked about precious metals?
I have not, no.
Okay, because I can't help but look at the underperformance of gold and silver.
Yep.
And we take a couple minutes. We got PCE coming out here in just a minute, so I'd like to show people as the data comes out. But really, I mean, silver and gold have been very disappointing, and a lot of people subscribe to the idea that Bitcoin's taken a lot of the shine, quote unquote, away from the precious metals. What do you say?
Yes, you can't deny that. Yes, they have. Although I think the buyer of cryptos is it's a bit different than the buyer of precious metals. Simply because they're in some countries it's the easy avenue to go to cryptos. It's much it's easier. It's completely anonymous, etc. I think the cryptos have taken the shine a little bit of the precious metals, but I think they're two very different asset classes. So I'm still constructive on precious metals. They're seeing, and we cannot kid ourselves. The price action we're seeing on silver and gold is not really from people needing to buy a bar of gold or a few coins of gold or silver for protection, in Venezuela or Turkey or whatever. It's not these people. The majority of the price action in these is paper, silver, paper, gold trading, and they trade in huge quantities. So right. I think that's the main driver of these, and they seem to be under pressure for the last couple of years. And they just don't like, the 200-day moving average. They really don't like it when it goes over. It's almost a pattern you see every time it touches it, it just gets smacked. So,
but one of the other things that you could really subscribe to, and I'm going to take control of the screen if you don't mind.
It's like the outer limits, like taking control.
Well, yeah, the outer limits.
All right.
Dale, your references go over so many people's heads, but the young guys, they're like, what? So the one thing I wanted to say about gold and silver too, they're also a place of storage under periods of instability in the capital markets, and obviously we've got the Dow, and the S&P ripping again at all-time highs, the Nasdaq ripping again. So there's no real need or sense of urgency to be long precious metals from a risk aversion standpoint, because who's risk averse? No one. So that's another thing that's just adding fuel to the fire, I think, that's keeping the downside pressure on these precious metals. Now, and I don't know if you agree with that, but we have a couple of minutes just before this news comes out, and we got PCE, pretty key inflation gauge for the Fed with personal spending and income. We have weekly unemployment claims. I think we have some Canadian data too. We have Canadian current account is also coming out. So inflation has been on the minds of most traders, investors as of recently, and we're expecting, everybody's expecting a continued tick higher in inflation, in these inflationary pressures. I don't know if we're going to get them or not, but I think we have, this PCE data is going to be pretty important, and the market's looking for 0.2% on PCE and also 0.2% on personal spending, and income to tick lower from last month at 0.3%. So we'll see if those numbers beat. If they do, the dollar can get a continued boost, and the dollar, I don't know if you pointed it out. I'm going to point it out real quick. Oh crap, we're almost there. But here's the hourly. The dollar ran right into resistance today. So matter of fact, I'll just keep it on the dollar index. We'll see how the dollar responds.
That was a nice call for a 2-3 day bounce, Blake, in the dollar.
Yeah, well, we've got it, and I guess today could probably tell us if we're going to get a little bit more. Okay, so and you know what? We're going to go right to the yen. The yen's actually ticking a little higher. PCE came in as expected at 1.4%. That's year over year. But it looks like the data actually is coming in a little bit better than expected. We had its unemployment claims are better. Personal income actually ticked up or came in line with last month's reading, but higher than expectations. So yeah, we're seeing a little bit of inflationary pressures. The dollar's generally speaking a little stronger. And you can see the dollar yen has also ticked higher, and I've got some dollar yen shorts from yesterday. Actually, I'm still sitting in them, and you know, kind of upside down in my dollar yen shorts at the moment. But I'm not really too worried about it, especially with stocks going higher, and we're getting, you know, pretty marginal lift. So I'm not really too terribly worried about it at this point. And that if that's all that we're going to get out of this data with the dollar, I'd be pretty disappointed. Let's see. I mean, personal income came in, personal spending came in as expected. So what were you going to say, Dale?
I'd call it tepid, you know, the response.
Yeah, I mean, incomes are really the number that's gone up a little bit here. So yeah, so anyway, you know, not a big reaction. Hey, Stelios, could you give me, just for a minute, because I have to respond to something, can you, because I mentioned about precious metals, could you give me, you know, your thoughts again on precious metal? I mean, look at silver. I mean, silver just continuing to get, you know, get up here.
Well, silver is frustrating. I'm long silver, and I'm now slightly underwater on it, which is very frustrating. I've had the bullish view on silver for the past 2 or 3 years. Had this is my 4th long, and they've, you know, it's gone well in the past. So this last one is taking its time. It's very frustrating, but I still am bullish for both silver and gold because of the dollar, because of you know, fundamentals still. You know, the view is that there are many reasons why precious metals should be rising, and I still have a bullish view, and you know, it might take a while, because we're seeing these this price action is really crazy. You know, sometimes there's these attacks during very liquid hours. You know, big sell orders, which I just personally don't understand, but. So, you know, my view overall is bullish, but it's going to take a long, you know, it might take a while for it to develop. I don't know if you showed the chart a little bit earlier. We're getting into a very big support zone now in the 1580 to like 1640. So where we are now. So, you know, it's a tough one. It's a tough one. It's very frustrating. And as Blake has said many times in the past few weeks in the webinars, precious metals are not going anywhere at the moment. It's very frustrating. You just get stopped out either way. You know, and after that, yeah.
Yeah, I was just gonna say, and these moves, I mean, even to the upside, I mean, we get what we think is going to be, you know, we think there's going to be an upside break, and it just flips the other way. And the same if you're short too.
Yeah, that gold break above 1310 or 1320, whatever it was, it must have got many people bullish up there. And yeah, and I think we're seeing I think we're seeing capitulation of some of these longs for sure.
Yeah, and again, I look at precious metals, and I really don't know what to do with them here. And probably, you know, when it's like anything, if I don't know what to do, I just leave it alone.
Go on your blue line, Blake.
What's that?
Go to your blue line.
It might. I mean, it's possible. I mean, this is a major. I mean, so, you know, when I look at gold, this is longer term. I'm obviously giving you a longer term view here. This broken downtrend line gave us a really good move, and I traded gold to the long side, which I very rarely trade gold, and I very rarely am trading it just in general, but I did trade it to the long side through here, and I gave back some of the profits as it came off. I thought we were actually going to go higher than we actually did. You know, if we come back all the way down to, you know, 1220 or 1230, somewhere down here. I know Stelios will probably be a buyer. I know I would be looking to buy it, because even if, and I'll just draw it out for you guys, just you know, to give you like an imaginary, like, let's say what happens here. If we come down in gold and we bounce, you know, at this trend line, we're still going to make higher lows. And if we end up making higher lows, that still, it doesn't disrupt, you know, this choppy but uptrend, you know, as long as we continue to make higher highs and higher lows on a weekly or monthly basis. It doesn't disrupt the potential of the longer term reversal. So that's if gold does come under pressure, that's how I'd be thinking about it anyway. So
I agree with that. That's a very nice look, actually. I agree with that.
Yeah, and so I don't, you know, are we going to break down? We could, because I think a lot of people did get long gold through here. You know, maybe some longer term positioning, you know, might get a little skewed. So now, what majors did you take a look at? I know you talked a little bit about crude, and I know you talked a little bit about, well, you talked about the cable. Did you take a look at anything else, Del?
We looked at dollar CAD and sterling in general. So
okay.
So, yeah.
Sounds good. Okay, so and I think what I should do is take a look at some of these other majors here. So the dollar, you know, let me go back to the dollar index. So here's the dollar, and this is where we're at today. So the dollar index had a really nice bear flag formation. We've been talking about that for the last couple of weeks. Failed breakout attempt. Everybody was long. You know, I know I played the dollar to the short side through the dollar yen. I played the euro to the long side. I did relatively well being on the short side of the dollar. And this week, you know, we talked about the dollar hitting the 618, you know, actually the end of last week, hitting the 618 and bouncing the last couple of days, which we've done. And here we are faced with a pretty pivotal area in the dollar index. And the reason why I say that is because we have bounced back pretty good. I mean, I would say that's roughly 38% retracement, and it is. It's right at the 38% retracement. You can see here. Let me get rid of this one. Okay, you can see we hit the 38% retracement. We hit a downtrend line, so the dollar stopped exactly where it should overnight. Okay, we stopped right where it should. And my 2 cents is, as long as we trade below today's highs, okay, so right there, as long as we trade below today's highs, you have to be extremely cautious about being on the long side of the dollar. Now, if we break through today's highs, so, and we've already gotten, unfortunately, we've already gotten the day that, well, no, we got Chicago PMI coming a little bit later, and we got a couple Fed members that are speaking today. But as long as we stay below there, I would be very hesitant about being on the long side of the dollar. Now, the flip side to that is, it is also, just so I can remind you guys, it is month end, not quarter end, just month end. So we might have some flows coming through, you know, especially during the London fix today, and I haven't read a whole lot on what the flows are going to be and what people are expecting, and I've been kind of searching around to get some information on flows, flow information. And usually I get something, especially if it's the end of the quarter, but today it's been very limited. So I guess the point I'm trying to make is, as long as we're still below today's highs in the dollar index, you have to be very careful. But if for some reason the dollar makes a move and we break above today's highs, that should be pretty bullish for the dollar index. Now, with that being said, let me take you over to the euro dollar, and you'll notice that the euro dollar, we're probing, this is almost the dollar index in reverse, almost, but you know, the dollar index isn't completely made up of just the euro. But what you'll notice here is the euro dollar actually stopped at the 618 retracement. Okay, it also probed this uptrend line, and we're holding. So I think if you were short the euro coming into today, okay, if you were on the short side of the euro, let's say you were some of the quote unquote smart money, and you were playing the dollar on the long side the last couple of days, as you know, as we sat here with Dale and we've identified that the dollar's pretty well bid and it looks like it's going to bounce. Let's say you took advantage of that and you were short the euro over the last couple of sessions, riding it lower. I have to point out that you're probably a little nervous about being short the euro at this point because of that 618, because of this false breakdown here. You're probably worried that the euro might bounce, and I personally think that the euro looks very capable of bouncing today, because look at the dollar. Even as we're talking right now, we got this little boost following the data. Okay, the dollar yen rallied to 112.45, and it just fell 12 pips. Let's take a look at yields. Here's yields, and yields are coming off too. Yields are not making new highs, overnight highs, and yields are up against probably some fairly decent resistance, because if we're making lower highs on yields, then bonds might roll over here. So if you're long the dollar, you have to be careful. As long as we stay below today's highs in the dollar index, there's a risk. I actually was looking at some of these other currencies like the Aussie. I don't own the Aussie and I don't own the Kiwi, but I was looking at the Aussie, and keep in mind that the Aussie came out of a descending wedge. Okay, we're holding some minor trendline support. Yeah, it came off overnight, but it's not getting destroyed at this point. It's actually holding up. So the Aussie might show us a bounce here. The Kiwi, also very similar trend line out of a descending wedge, almost identical to the Aussie, because look, here's the Aussie, here's the Kiwi. Both came out of descending wedges and are sitting probably on some decent support. Those could bounce. That again leads to dollar weakness. Here's the Swissy. The Swissy rallied right up towards 99 cents, and it's struggling up here. The dollar Canadian, if you guys didn't see the dollar Canadian had could have a really big rejection right through here. Let me show you. And not make new highs. That's concerning. Again, the dollar Canadian is one of those currencies that really is more of a leader regarding dollar pairs. So if it's not breaking out to the upside, got to be a little careful. And you can see the dollar Canadian is actually facing some pretty nasty previous support, should act as current resistance. So any move up towards 130 is going to be scrutinized quite a bit. You got the US dollar Norwegian krona, the Nordic currencies. Once again, it's up against 618 retracement, kind of struggling up here. US dollar Swedish krona. Oh wow, that right there is a nasty reversal. Does anybody know what this candlestick pattern is called that we're setting up? And we got 16 minutes before this 4-hour candle closes. Anybody know what that is? Let's see if I got any answers from you guys. Madras, very well done. Ziggy, good. This is dark cloud cover. It's not, well, and we still have 16 minutes. I would just have to say, let's assume that we closed here. Now, even if, and I'm gonna give you something here, let me see here, this, even if, oh, no. If we had a wick and this candle looked like this, that would be bearish engulfing. That would be bearish engulfing. But we have, because a lot of you said it's a bearish engulfing candle. It's not. It's not until we have to engulf the entire, like the upper body is fine, the lower body is fine, but we have to have a wick that goes below that. And we have 15 minutes to do it. So, you know, hell, we might actually end up getting a bearish engulfing, who knows. But that's that right there is a nasty, nasty reversal. And US dollar, Swedish krona, that's another one. That's another one that is a dollar tell, canary in the coal mine. Okay. So guys, I mean, you know, again, I'm going to just reiterate, as long as we trade below this blue line here, I'll even make it here. I'm going to make it so obvious to you guys, you won't even know what to do here. Let's see. I'm going to make it thick. I'm going to make it, let's see, thick. Let's see. I want to make it pink. I'm going to make it have glitters. I'm going to give it some stars. I'm going to put some confetti on it. I'm going to make it dotted. There you go. So, oh crap, why didn't it hold? There, okay, there we go. All right, so now you got a pink dotted confetti covered sparkle line. And as long as we stay below that line, you got to be really careful being long the dollar. Did I make that obvious enough? I don't know if is there anything else I can do? Dale, can I do, is there anything else? No? All right. No one's listening. Still, at least you're laughing. I'm sitting here, I'm humoring myself. I'm actually entertaining myself at this moment, so. Okay. I'm glad somebody's laughing.
You're the best, man.
I don't know about that, but I'm just trying to myself. Okay, but so this
I'm insecure. I'm insecure when, you know.
Do I make you insecure? You thought you were funny? I'm really not funny. You ask my kids. My kids think I'm a dip crap. I didn't want to say it. So let's take a look at. So if you utilize ForexAnalytix, so you get these updates throughout the course of the session. You can see we update harmonic patterns on the S&P, DAX, basic technical analysis, euro yen. I mean, this stuff all comes, you know, around the clock pretty much. Even in Asia, even though we don't have somebody specifically labeled for Asia at this point, as we grow our team, we eventually will, but you used to even get Asian updates sometimes, like last night. But I want to pull up the euro pound, because I actually sent this out a little earlier, and I'll show you the chart. But and this provoked me. Where in the hell is my euro pound? Oh, here it is. This provoked me actually to close out some of my euro pound short, and I don't have a pattern in play set up. This is more of a trade I took following the
Carney thing.
No, it was a headline from like two days ago about the negotiating the Brexit, what they owe the EU, yada yada yada. Anyway, I shorted the euro pound. If you guys were in the chat room, you knew that it was around 88.93 or so somewhere where my cursor's at, somewhere around here.
A little late, but it worked out great.
Yeah, a little late, but it worked out great. Yeah, I was actually running an errand, dropping off my wife's computer because she had forgot it, and I had to take it to her. She really needed it. This time of year, my wife's business is kind of crazy, as she's in the gifting industry and it's holiday season. Anyway, so I shorted the euro pound around there, and I closed out a third of my position this morning because of what looks like to me a Gartley pattern. So this is you can see there's a 78% retracement. This is a 618, 161% extension, 88%. This is a pretty much, in Gartley, in harmonic patterns, it's great when they are to the decimal point or the 10th of a decimal point when you're building a harmonic pattern. They are never, or I should not say never, they rarely match up to the decimal or 10th of a decimal point. They just don't. And so, you know, whenever I look at harmonic patterns, I'm getting the general feel. And this is a Gartley pattern. This is like a perfect Gartley pattern. Also realizing that it's in a, you know, it's in a bearish wedge. So because it's in a bearish wedge and we probably have to build more of the apex here in this wedge, what we're probably going to end up doing is doing this before it eventually, you know, breaks down or breaks out. You know, we probably have a little bit more work to do here. So therefore, just in case, I covered some of my position here, and you know, if we bounce, I'll reshort what I covered, you know, somewhere up here, maybe in the next day or two. But at the same time, I'm still looking at the pound, and the reason why I didn't want to cover everything is because if you haven't looked at the pound, I just tweeted the pound futures the futures chart. It looks bullish, and so we may not complete that. It may break all the way down, but you'll notice that it says possible intraday Gartley pattern setting up with key support at the 8750 level area. We could see a bounce in the pair, considering so much horizontal support, and we bounced a little bit since then. I mean, you know, since that was issued, we've probably bounced about I don't know, 15 pips or so here. So over the last hour. So you know, it could bounce, but like I said, the pound looks so damn strong that, you know, maybe what might end up happening is we do something like this. Ooh, there's my confetti line. We may end up doing something like that, which I wouldn't doubt it. I'm not saying that it's going to happen. It just, you know, that's possible. So anyway, that's kind of what I'm looking at, and you know, especially with the euro pound, the reason why I'm so focused on the downside right now is I know we discussed this yesterday, but I'm gonna reiterate. We have a major false breakout up here. Do you guys see this? This is major. Whenever you have a false breakout, it tends to lead to a breakdown. Okay, or you could say it the other way. If we get a false breakdown, it usually leads to a breakout. So we had this false breakout, and also you see this, how we had this false breakdown right here. It led to a breakout. Then we have this false breakout, probably will lead to a breakdown. There's a higher probability of that. That's why I'm so focused on the short side right now. It's not, and then, you know, you can add everything else in there, you know, with what Stelios is talking about as far as, you know, the short position in the cable, or in the pound, excuse me, and you know, all the headlines that have been coming and the negotiations that are ongoing process where, you know, we're one headline away from squeezing in the cable, which is very, very, very true. And matter of fact, I know Stelios talked a lot about the pound, and I showed you the pound futures. Well, actually on Twitter I did, but on the pound dollar here, the pound dollar is not the pound futures. So let me get a clean chart here. I'll use Oanda. Okay, so here's the pound dollar.
Yeah, right there.
Oh no, we're breaking.
Okay.
See, the pound futures may be at the resistance, but the pound dollar is breaking.
Okay, nice.
Yeah, so it's a little, that's why I'm like, you know, when you start to see, you got the pound dollar, I'm showing you the pound dollar, it's breaking out. Now, it may not hold today. It could, you know, drop back below 134 and we'll go, ah, damn. And look, not because I'm long the pound, but because as a trader, I love volatility. As a trader, I want volatility. As a trader, I want breakouts, okay? Even if I'm positioned the wrong way, because let's say I was, and I'm not, but let's just say I was. If I was short the cable right now and I took a loss, or let's say I was short and I took a loss, I would instantaneously be looking to reverse right now. Oops, let me fix that. Okay, I'd be looking to reverse right now, and if I get a breakout, and I know it's happening across the board, well, it's not just the pound dollar, and I know Stelios pointed out the some of these crosses, but look at the pound Aussie. By the way, we put a pattern in play on the pound Aussie yesterday, which is up already, you know, a good amount, because we got a bull flag pattern. See the bull flag? See the bull flag? Yeah, so and it was breaking horizontal support or resistance at the same time. So, and that target's 180. So we got the pound Aussie that's breaking out. We got the pound New Zealand that's breaking out. Yes, this is divergent, but you know what? You might go, Blake, the RSI is divergent. I see that. But the RSI is also breaking a triangle, which means the RSI could do this. So if the RSI breaks out, what do you think this is going to do? Well, this will probably do this, right? I'm just, I'm trying to let you guys imagine what I'm thinking here. So there's the pound New Zealand. Here's the pound Canadian. Look, we have an inverted head and shoulder pattern. This is still working. It never got negated. We never broke back below the shoulder. So the inverted pound Canadian head and shoulder pattern, it points to in the middle of this resistance zone right up against these highs, which is 500 pips away from where we're currently at. So if you look at the pound, it's not just the pound dollar, it's the pound everything. So, and that's got to be scary. And look, if you look at the pound dollar and you go, okay, Blake, let's say you're right and we break higher, and you subscribe to the idea that we might be breaking out here, does that mean the pound has completely reversed its course and we're never going down again? No, I mean, there's so much that can go wrong in the next year or two regarding Brexit. And how smooth is it going to be? How do the negotiations go? There's so many things that can go wrong. There's so many moving parts and pieces that I know I'm not privy to. And I know if I'm not privy to, you sure as hell ain't privy to. There's a lot of things that are happening behind closed doors we don't know about. But the market itself can squeeze because the positioning is so short the cable, and has been since the Brexit announcement, which was right here, by the way. So could we recover to 138 to 140 in the pound dollar? Absolutely. And that may not change anything other than positioning getting rebalanced. So if you don't think that, if you're in the camp that says, oh, Brexit is going to be the worst thing that's ever happened to the UK economy in 100 years, it may be, and it may reflect in the pound 2 years from now or 3 years from now. We could very easily, and I'm just talking this out, guys, because I just want you guys to think a little bit rather than just looking at charts and saying what's happening here, or or being so bullheaded, because I know a lot of people are. So many people that are bullheaded saying, oh no, this is going to be so bearish for the UK, I can't even see straight. And matter of fact, the pound dollar is probably going to see parity at some point. It may, but it may do this first, then do that. This right here could be complete positioning rebalancing rather than a change in what is happening in the overall macro environment for the UK economy over the course of the next few years. So don't ignore the fact that positioning is so skewed right now. And I know Stelios has been beating people up about this for like the last, several months. Positioning is so skewed.
I don't beat anybody. I don't beat anybody up. Come on.
You only beat your kids up. I understand that. I know. I'm just kidding.
The art of this CPS on when, isn't it? The art of this is not the if; it's always the when.
It's yeah, true. Yeah, I mean, well, there's that's why I think if you just factor in what you see in front of you versus what's happening, or versus what's really happening in the background, or what's happening with positioning or sentiment, or if you disregard a lot of these components of the market, you're going to get blindsided a lot. And that's why I, as you guys know, I am a technician, yes. And if I had to drop everything and only look at charts, I would do it. But the fact of the matter is, I have a lot of information in front of me, as you do, so we need to factor all that information in to come up with, you know, what we think is going to happen in the market, and to help confirm why things are taking place on the chart in front of your eyes, why price is developing the way it is. Anyway, that's it. That's my spew for today. But I know you have I know you have a great guest, so I don't want to intrude on that, Dale.
Okay, Blake, great job. We made it without Logie today. Great job, Stelios. And
yes, Stelios, thank you so much for being here.
Yeah, great job, buddy. And we do have Angie Setzer here. So for you guys that are interested in the agricultural markets, the grain markets, we have the goddess of grains here. So Angie, I'm going to make you the presenter, and looking forward to meeting you, hearing your voice, and seeing your screen. And thank you for taking time out of your day to join FaZe. Waiting to hear you and see your charts. Let's see. Can't hear you yet. See your charts?
No.
You're on the phone? How about now, Angie?
Yeah. Can you hear me now?
I hear you. I can,
All right.
Angie. Thank you so. All right, great to meet you.
Good to meet you guys too. I'm excited, and like I said, I'm working with one arm tied behind my back. I'm typically sitting in my office at home with two screens and ready to go. And right now I'm sitting in a hotel room in Chicago with my laptop.
My kind of town.
Yeah, right. That's what.
My hometown. So you know, I usually start off asking people, you know, about the beginning of their journey, and I'd like to ask you about that. But I'm guessing that you got into the business because it's in your DNA.
Pretty much, yeah. I joke there's mud in my blood. So I grew up on a farm. I spent a lot of time in a tractor when I was a kid. Watched my grandfather. You know, he grew up on a farm as well. We grew up in rural Michigan, so you really didn't have many other options. But he decided, he was a tractor salesman most of his life, decided he was going to go into farming, and started out on his own and built up a pretty solid farm. My dad farmed with him and my uncle, and so I spent a lot of time in a tractor as a kid, but I never realized that this was a profession.
Okay, so what were you saying when you were growing up, you know, I love the farm, but I'd really like to try something different, before you ended up becoming a trader, focusing on agricultural markets? Did you have another dream?
Yeah, I was actually going to be a counselor. A middle school counselor was my goal. I mean, my first dream was to be a meteorologist, but I am not so great at science. So I went to school to be a teacher for a minute, and that was going to be my stepping stone. And I looked around and realized that there were an awful lot of teachers or people that wanted to be teachers too. So I thought, well, I'll just graduate with an English degree, see what happens. And fast forward 15 years, and here I am. So I ended up getting into a
You still are a teacher. I've listened to a few of your podcasts. So there are different ways to teach, and I always loved the grain markets, the ag markets. You know, when I was a runner on the floor, the pork belly pit was the biggest pit, most volume on the floor. So I'm going back a long way. Cattle and hogs as well. I was at the CME, not at the Board of Trade, but I always loved the grains, how they were great technical markets. And you know, one thing about the grains is that you can't print wheat. The Fed can't control as much, have influence over the grain markets. It's more about Mother Nature, isn't it?
Yes. Yeah, definitely.
So,
I am a commodities fan. That's, you know, anything grains and oilseeds specifically. But yeah, it's all about Mother Nature and what we're able to provide, you know, and population continues to grow and it gets more interesting, it seems, by the day, even though we've been kind of flat as of late price-wise.
Yeah, so the strength has been in the livestock, right? And that's because we've had less supply of livestock, therefore less demand for feed grains. Is that behind the weakness or the stagnancy in the grain markets as of late, or is it just general commodity deflation that has been the reason that it's been lackluster?
Oversupply has been the main thing. I mean, that's we talk about farmers being really good at what they do, and so our biggest struggle as of late has just been the fact that we've been able to provide significant supplies to the global marketplace, and then we have some skewed issues, I would say, or you know, perhaps some not clear pictures of what's going on. A lot of folks will talk about the global pipeline and things like that, and just like in your outside commodity markets, we've seen China do some really interesting or make some really interesting moves with their stocks and things like that. So a lot of times you'll hear people talk about the burdensome global wheat supplies. And reality is 48% of the world's wheat supplies are sitting in the hands of the Chinese, and China is still importing significant or reasonably significant amounts of wheat. So they have over almost half of the world's supplies, yet they're still bringing more in, and so that tells me that.
Go ahead.
That tells me that we're. It may not be clear, but it tells me that for one, those stocks are not going to make it into the global pipeline anytime soon. China is not going to be a wheat exporter, and it also makes me question whether or not there's a validity in the idea that we have this burdensome supply, because reality is we're one production hiccup in wheat away from going from basically feast to famine, and with our growing world population, we're basically, like I said, one production hiccup away from an explosive move to the upside is my opinion, and it's just a matter of time before that happens.
Okay, so that's a very interesting view, and I want to talk a little bit about that, but the Chinese are hoarders, okay? So maybe they're taking a lesson from Joseph, and they're expecting the same thing. Any other reason you could think why they're stockpiling this much wheat and continue to be a buyer?
Well, I think that, the reality is that they can say that they're stockpiling this much wheat. I mean, you can't really see it. It's not as though we've seen, shiny bins sitting on, dotting the Chinese landscape. We haven't seen grain piles.
Maybe they store it in their ghost cities.
That's just, that could be. It's what's actually filling those apartments. Is wheat. I joke that they have corn in their old Olympic swimming pools, and that's the thing is they talk all the time. They've got 38% of the world's corn and 48% of the world's wheat, supposedly, based on what the USDA has to say. And it seems like that would be a bit more visible. 4 billion bushel of corn and wheat. It should be something that you would see, at least in my opinion. And so it's just been an interesting thing, because I think part of the dynamic in that is that they need low food prices, and we saw in 2012, from about 2006 to 2013, actually, we saw a significant increase in corn, wheat, and soybean prices, and it really kind of put a pinch on them.
Right.
And so the easiest way to kind of correct that, of course, would be to say that you're sitting on these burdensome supplies of wheat or corn, whatever it may be, and that has worked. I mean, if you look back, and of course this is just a year chart, but if you look back at 5 years in wheat.
Yeah, look at that. We were what was the high, around $8.90 or $9?
Yeah, $9, and that was in Chicago wheat, which is soft red wheat, which is a lower protein source. It's more used for cakes, pastries, things like that. In your spring wheat and in your hard red wheat, you saw significantly higher highs because that is your food wheat, your breads, your pastas, your things of that nature. And so we saw a real significant spike up there.
Was that a flooding event in like North Dakota and places like that? That was a weather market that took it up there, Angie? What was the cause?
Yes. Yeah, it was drought, I believe. If I go back in time, it was a drought issue and a big production shortage that we saw. And at that time, like I said, China had not yet begun stockpiling. They'd actually just really entered into the market as an importer between about 2007 to 2011. We suddenly saw this burst in buying. And so you saw this burst in buying, you know, combined with, of course, the ethanol movement in the corn market. You saw a 1/3 increase in demand, a 5 billion bushel demand explosion in corn. And then in 2012, on the corn side, we had a significant drought. So you saw this huge buildup in demand, you know, a demand explosion, you could say, and then followed up quickly by a supply side struggle. And so we saw a real significant pop in prices that encouraged a growth in production worldwide. So you saw Russia come in. Russia is now the world's largest wheat exporter. And so you saw them step in. You've seen South America really expand their production. And so it's been one of those things that now we have this idea that we have a surplus supply. But the talk is, or the question is, as the population continues to grow and the population changes how they want to eat, which is what you've seen in the livestock sector with pork and cattle, how is that going to impact us going forward?
All right, so one of the triggers of drought, at least a theory that I believe in, is the difference between El Nino and La Nina. And I know that there's a La Nina developing out there. Are you a believer, having one time had an interest in meteorology, that this could be the hiccup? A La Nina year normally leads to potential droughts in the Midwest?
Yeah, I mean, it's definitely something to watch. A lot of folks are saying that this La Nina is going to be mild in comparison to some that we've seen, but we have seen drought conditions you know, remain in place or continue to grow again in Montana, which a lot of folks will say, well, that's not the Midwest, which is true. But they are a very significant producer of spring wheat. So it'll be something that we'll want to monitor as we work our way through the winter time into the spring planting season, because we did have a spring wheat production shortage this past year due to the drought in the Dakotas and Montana. The southern plains, it's already starting to show up. They've been very dry down that way, and that has impacted what we've seen for early winter wheat development, because in the southern plains and throughout much of the eastern corn belt area, wheat is planted in the fall, spends the winter in dormancy, and then comes alive, grows, and is harvested the following year. So the winter weather will have a big impact on that. And so that's something we're definitely watching as we work our way through. The biggest receiver, the biggest impact that La Nina will have over the winter when it comes to markets or any sort of development there will be what happens with the South American crop. You tend to see Brazil and Argentina be more heavily impacted by La Nina, and their growing season is actually just really getting underway here. It's kind of like their June down that way, and we are seeing some significant, we're in the southern hemisphere, we're seeing some significant dry conditions starting to develop in Argentina, and they are one of our larger corn export competitors. Wheat exports are generally large out of Argentina, and soybeans out of Brazil. So we'll definitely be monitoring that as well. It has impacted Australia as well. Australia's start to their wheat growing season has been rough too. So it'll be something that we'll be monitoring because it can have some real significant global impact.
Well, when I was a young man, we used to have a war chant, Angie, beans in the teens. And beans in the teens, remember, and it did happen. Can we take a look at a longer term bean chart?
Yes.
Take a look at that.
that direction.
Yeah, because that's also a big protein source for Asia. And,
Yep.
you know, as the middle class grows, more and more demand for bean products. Is there a shot that we could see beans in the teens again? I mean, they're not that far away. What was the high, about 15 during that 2011?
Actually, yeah. In 2012, we were up into, let's see if this will pull up for me here. Of course, it doesn't want to now because we need it.
Here it comes.
1 second. Did it pull up for you? I'm looking at the 5-year,
Okay.
which actually will be, it seems like just yesterday, but it was 6 years ago. There we go.
Okay, there you are. 16.
Yeah. So here you go back 2013 here, July of 2013, we saw them trading, 1604. If
Right.
I can pull up the 20-year, 17, 18 bucks, $17 was the high end of things there in July of 2012. And, we've seen beans stay significantly supported. I mean, of
Yeah,
course,
they're making higher lows here, aren't they, Angie?
Yeah,
From a year ago.
definitely. And that's something to be watched. That's, like I said, that's the La Nina impact, the unknowns over what's going to happen with South American production, the concerns that we could see some cutbacks there. Chinese demand has not gone down at all. In fact, we're looking at China importing a record amount of soybeans this year, 100 million metric ton, which is a significant amount of soybeans that they're looking to take in. And so any sort of production hiccup will push beans back up pretty solidly, especially if we were to have a double whammy with a Brazil production issue and followed up with a U.S. production issue. There is some concern, of course, that if Brazil has a reasonable crop and with prices still supported compared to what you're looking at in corn, there's an idea that we could see an increase in bean planted acres next year and potentially see the market start to kind of fade a bit more than what it has. But that's been a market call by many analysts for the last 3 years. So eventually a broke clock's right, twice a day or something. But the reality is we're seeing higher lows. We're seeing a real consolidation in the pattern. If you just look at the last 3 months, really, we put a low in place and we saw that kind of dip down there. But reality is we've really kind of seen sort of some consolidation come in and the market does not have any desire at this point to move really away from this $10 range, which is a comfortable number and fits the supply. But like I said, any sort of in supply hiccup coming out of South America will definitely send this market quite a bit higher because investors have found over the last couple years that they've made more money by betting on soybeans moving higher than they have either corn or wheat, just on the grain side. Because again, right now China has a perceived shortage, so to speak, versus their demand when it comes to soybeans. And they have an overabundance of corn and wheat like we discussed earlier.
Any dollar effects, strong dollar, weak dollar, currency effects on grain markets?
Yeah, I mean, they're huge, actually. With the competitive global market structure that we're in, with supply availability elsewhere being as large as what it is, we really have benefited or at least seen some strength in exports when our dollar is weaker. It makes us more competitive versus South America and Russia and others out there. So it's one of those things where you almost feel guilty as a grain trader rooting for a weaker dollar just because of the other impacts that it can have. But reality is a weak dollar helps with not only our meat exports, our dairy exports, but it definitely you'll see the real significant impact when it comes to wheat exports and corn. And then soybeans, of course, versus Brazil, because they're our biggest competition. There's really two main whole bean export suppliers to China. And with Brazil having an overabundance of leftover crop from their record crop last year, we need that dollar, that weaker dollar, to kind of give us that competitive advantage. Of course, we produce the highest quality, most reliable crop, but money talks more so than anything. And so we definitely monitor the the currency moves very closely to kind of give us an indication as to what that'll mean for exports as we move ahead.
And is the ethanol and using food for energy, since, you know, prices have declined in oil, although they're on the rebound and they actually look pretty good, is that still a big factor in the corn and bean market, or has that fallen out of favor with lower energy prices?
The thing is that ethanol really got a bad rap from the food industry, you know, the Restaurant Association and the Grocers of America and things like that, you know, during that 2011 to 2013 peak. But the reality is that during that same time, no one really pointed out the fact that employment costs had grown, cost of transportation costs had grown significantly, packaging had gone up, you know, all of these things had resulted in a significant increase, or at least at that time it was a perceived significant increase in food costs. And you couldn't turn on the news without hearing about how we were using food for fuel. Reality is field corn, the corn that we use for ethanol production, is not used for food. I mean, it can feed cattle, but when you turn a bushel of corn into ethanol, you have distillers' grains that are produced that is actually a more concentrated food product for the cattle to eat. So you have some benefits there. But yeah, ethanol has, you know, it replaced the MTBE when we pulled that out. So it kind of garnered almost a guaranteed certain percentage of inclusion in our fuel anyway. The one thing that we've seen in ethanol that has actually been a more significant gain lately has been China's move toward having a 10% ethanol mandate. Japan has actually looked to start importing some of our ethanol because the Brazilian sugar cane ethanol production has gone up in cost, you know, because of sugar prices there and things like that. And you know, at this point in time, I could stand here and confidently say that we, you know, the American farmer has the ability to produce, you know, as much ethanol, or at least as much food stock for ethanol as needed. And you really probably wouldn't notice a significant increase in food costs as a result, just because we've gotten really good at what we do. I say we, I mean the American farmer. The amount of bushel per acre we're able to produce is up substantially from the start of the ethanol boom. And in fact, we actually, with the, you know, our leftover amount of corn that we have, we could see a further increase in blend rate, you know, up to E15 even, and probably not notice any sort of blip in outside market factors or anything like that. So, but it is something that we watch very closely. You know,
Angie, I'm so glad I asked you that question, because I had that misconception that, you know, especially back then when food prices were going up, what a brilliant idea to you know, burn food to drive our cars around when people were hungry. So that really clarified it for me. I appreciate that. I'm sure if I had that misconception that I'm not the only one. So you're a great spokesperson for the ethanol industry.
Well, it was definitely something that we heard a lot of. It was definitely something that was a very contentious, and it still is. I mean, we still struggle with the Restaurant Association out there. We still struggle with a few groups that are against ethanol, and understandably so. I mean, I am very much, I don't like government involved in mandates or something of that nature, but we definitely needed that boost with the RFS to get started. We just got new news overnight that the EPA is leaving that mandate unchanged. So there's no increase there or any changes there, but now we're starting to see a healthy supply and demand driven market structure. I hope, you know, with folks looking to use a little bit better blend, and there's really no, you know, and some folks will argue this, but a lot of science can prove that there's really no cleaner source of octane out there. And of course, it's much better than that MTBE that we were using there, you know, pre-2000, I think 13 or maybe earlier than that. But yeah, it's a hard thing because no one really wants to spend a lot of time you know, really educating, you could say, the public anymore. It's one of those common it's easy to say this and have folks fall in line, sort of deal.
Educate us on one more issue. Is there anything in the new tax bill, whether it passes or not, that's going to affect grain prices, subsidies, etc.?
You know, we're really watching the farm bill more than anything. The tax bill is there. There's a lot of talk about the estate tax and things like that. And I am almost as anti-political as they come. I mean, when I make a statement, it's more driven by my customers or the market structure or something like that than a political bias, as you could say. But, you know, overall, at least at this point, I haven't seen anything. There is some concern, or there's always discussion about the estate tax and things like that. And, you know, I'll be completely honest, I've never really known a farm that's been significantly hit by the estate tax. You know, at this point, there's so much planning for succession in farms that there really shouldn't be anyone that really gets hit by that estate tax, at least in the agriculture industry. I mean, it's easy to point to and say, you know, we're hurting our family farms and things like that. But overall, from what I've seen, there isn't really a significant, or there won't be a significant impact to agriculture in that the bill that at least has been proposed at this point.
What a great interview, Angie. It's really outstanding coverage. You're very eloquent. Talking about your special interest and your trading, and I wish you a lot of success for your customers and for you the rest of 2017 and into the future. And what's the best way people could follow you? I've already given out your Twitter handle at Goddess of Grain. Do you want to show your podcast where the girls talk about?
Yeah, we can do that. I actually was just looking because we'd had a conversation. We've got Girls Talk Ag, the Girls Talk Ag podcast. That one's a little bit more, I would say I'm not as eloquent in that one because it's more of letting my hair down and we discuss the issues that are going on in agriculture, the issues that farmers are facing, and then the issues that, you know, you've got, I guess nowadays, with everything that's going on in the world, you've got your gender topics, you know, and so we talk about what it's like to be a mom in the industry. It's myself, I'm a grain trader or merchandiser, and I have a friend, my other partner in crime is Karen. She's an independent agronomist and business owner, and then we have our friend Jen, who is a farmer. She farms with her husband and father-in-law in Indiana. So we have a very wide view. You know, our biggest desire, of course, is to educate, but also make folks laugh. And then, Twitter is the best way to follow me if you want to kind of follow what's going on or what I'm watching in the market structure. That's the
ceiling for women in agriculture. The ceiling's made of cotton, so you don't hurt your head, right?
So you don't hurt your head. That'd be nice. We actually need the cotton demand too, so it would be great. And that's one of the things that we talk about is the perception in agriculture is that it's very heavily male dominated, which it is. The greatest thing about being a woman in ag is you never have to wait in line to use the bathroom at a conference. So it's definitely one of those things that we talk about quite a bit.
What a pleasure. What a pleasure meeting you. Thank you so much for edifying our community on the grain complex. You can't eat gold, and I really think people need to pay attention to this. If there is going to be some type of shortage, dramatic opportunities present themselves in the grain complex. So very nice to meet you, and you're now my trading warrior sister.
Well, I appreciate it, and if anyone has any questions, tell them not to hesitate to give me a shout out on Twitter, and we can chat about it.
Well, have a great holiday season, Angie. Thank you for your time today.
Thank you. You too. Thank you.
You're very welcome. Okay, Faith, that's it. Just a quick look. Looks like the euro is popping, and even the weak sister, the Aussie, is popping as well. If you could see, I believe that, we're getting the pop in the euro, getting the pop in the Aussie. Thank you very much, all you viewers at investing.com. Thank you, Face Warriors. And we'll wrap it up with a TGIF session tomorrow. Good hunting, and most of all, remember, don't just count your pips, count your blessings. Adios.